Hello, everyone, and welcome to our final cyber insurance power panel of 2025. Yes, throughout the year, we've had experts on hand to discuss the latest market developments and provide their insights. And today is no exception, as we touch on everything from market capacity to AI to supply chain attacks. And to do that, we welcome Neil Jardine. He is Chief Cyber Intelligence and Claims Officer at Box Insurance. Nadia Hoyt, National Practice Leader, Executive and Professional Risk Solutions at USI Insurance Services, and John Farley, Managing Director, Cyber Practice at Gallagher. So to kick us off, let's talk about some of those systemic cyber events, such as recent large-scale outages and supply chain attacks. They've certainly raised questions about insurability. So I want to ask each of you, how are you evaluating and managing aggregation risk across those critical vendors and sectors? John, I'll start with you.
Well, thanks, Paul. Well, we look at supply chain losses. We've had the luxury over the last few years to get more insight into what they actually mean in terms of loss. And when you look at the different sectors, really losses will vary, right? So you look at airlines, for example, when you have a system outage, and we've had one a couple of years ago with a cybersecurity company that went down. They went down for just a few hours, but it led to significant losses. We saw an airline sue them for $50 million. So from the airline sector, that downtime is significant. The loss is going to be severe. But when you look at other sectors, it may have been just some delayed income, not truly lost income. And so really, you have to look at it from sector to sector. And I think the underwriters are doing that. Certain underwriters are avoiding certain sectors that they know are hypersensitive to downtime, or maybe an e-tailer during the holiday season that, a loss of a couple hours during December means a heck of a lot more than it does in July or August. So I think underwriters are taking a real nuanced approach to it and are hypersensitive to certain sectors.
I guess for brokers, Nadia, perhaps this means a need to have deeper conversations.
Yes, for sure. Making sure that you have a better understanding of your client's ecosystem. So being able to better understand who their critical vendors are and who those vendors are, and what are the financial impacts if the policyholder or the client is down and those vendors are not able to gain access to funding because of a tool or solution or product. Being able to understand that ecosystem better is definitely something that I think brokers and underwriters alike are beginning to understand. It used to be that underwriters would collect the information about some of these vendors, but not all the time action it. I think we need to see a little bit more around that for sure. I also think that making sure that we arm our clients or arm the policyholders with an understanding of what they should be thinking about or asking when it comes to vendor contracts. I know it's tough. Sometimes you're either David or Goliath in that particular conversation. But when you have the opportunity to influence, understand that someone who is a custodian of your data should be letting you know if there's anything untoward or potentially untoward with that data, making sure you're able to do that. And I also think that brokers have to, once we have a better understanding of the entire ecosystem, really dive into analytics, cyber analytics, to really give our clients an understanding of what their most potential loss could be. So utilizing those three components, I think, helps to broaden the conversation and explain it a bit more.
From the insurer perspective, Neil, does this sort of enhance the need for due diligence?
I think so. And Nadia's point about David and Goliath with the contracts is a good one. There's critical vendors around the world that a lot of SMEs and a lot of clients rely on. And, you're kind of pushing uphill if you're a small person trying to ask for big changes in a contract around dependency and such. So, from our point of view, looking at aggregation risk is a lot about using our technology and stuff to identify, common software solutions that our clients use through our attack surface management scans, and then making our clients aware of that and make our underwriters aware of it. And it's really about kind of understanding, okay, what is it that how is it going to affect our portfolio? How's it going to affect our client if that if that business does go down, and then establishing kind of like what is our playbook going to be when it does go down, and then having, for lack of a better description, almost like a holding statement or a holding plan. So that vendor goes down, what are we going to do? What are the actions that we're going to take? And building that out for the common software vendors that we see across our portfolio amongst our clients, and as our clients shift vendors as well, being prepared for that.
And you'll know this really well, Neil. Of course, the US cyber insurance market is super competitive right now. There's abundant capacity. So what steps are you taking to ensure that lower premiums, broader terms don't undermine that underwriting discipline in the face of course, increasingly automated AI-driven threats?
Yeah, AI automated threats and attacks have been really coming about for the last number of years. And, the big thing with it is they change. So, an insurance application is very much a point in time check. You're asking for a set of controls at a certain time, and then you're kind of moving on. Same with a scan, right? A scan is a point in time check on a client. You're seeing if they're good, and then you're moving on. So what we like to do is instead take an approach where we're going to ongoing kind of scan our clients, monitor our clients, and kind of, help create sort of an open environment where they can reach out to us when they need assistance. And then we also reach out to them and say, hey, we're seeing this, this is something you could do to prevent an attack, or these are the types of attacks we're seeing coming down the pipeline and stuff. We think it's a 0-day. You're going to want to do this and stuff in order to secure yourself and look for better outcomes. So it's less about trying to force the client or the broker into a certain box in order to be able to be provided with our policy. And it's more about saying, okay, great, let's take a look at your client. If they want to become a partner with us and work with us, we are happy to then help improve their cybersecurity hygiene along the way by providing all of these other services that we do that are outside the policy, because the policy is kind of a final backstop. What you really want is you want those services in the middle to kind of stop you from needing the policy at the end of the day.
And that's the thing about cyber as well, isn't it, John? I mean, it's always been a never-ending race with the hackers, and that's only even more so now that AI is involved.
Yes, it's absolutely a battle of technology, both on the offense and defense here. So, we've seen evidence. Nation states are now using the latest AI-enabled technology, which is sort of terrifying because they are far-reaching, they're pervasive, they're complex attacks, and so it's really going to be up to the defense now to use some of those same sort of tools to defend against those attacks. So we've done that, right? We've had in the past EDR tools put in place that identify a hacker the second they get in and alert the organization. And then we've had developments where we've had MDR teams or SOC teams overlaying those EDR tools with some human eyes on it. And so that evolution is definitely going to continue. They have to, staying in lockstep and one step ahead of the hackers is imperative. But when you go down to sort of the middle market space where you may not have organizations that have the wherewithal to defend themselves, they're outsourcing that to MSPs. So then the question is, are the MSPs going to be able to fend off those really sophisticated attacks with the latest technology? And so I think the underwriters are going to start to, get a better insight into who these MSPs are, popping the hood and saying, are you able to do this? Have you done this? Give me some evidence that you've fought off those attacks. And maybe if you haven't and you've fallen victim, they're going to look hard at other MSPs and sort of rank them perhaps. So it's going to be really interesting because this is happening very quickly and the response is needed now.
And do you think, Nadia, that there's enough understanding of these risks?
I don't think so. I think we're still evolving, and AI is certainly pushing the envelope in terms of what we need to learn. Just recently with the FI disclosed attacks, that is scary. It should be scary when AI is being used to manipulate the development environment when it comes to software, and then how that could then have tentacles everywhere. That to me is intensely scary. So being able to understand the cause, effect, and impact is certainly something that I think education has done a really great job of doing, but it still needs to do more. There still needs to be evidence-based scenarios that folks are able to understand and digest, so then they can then say, I now understand what this risk and exposure would be. The education needs to happen at all levels of the sort of timeline, if you will. I mean, it needs to be at the front end with the policyholders, certainly with the insurance companies for sure. But then being able to have the brokers better understand and guide the conversation and inform the conversation is certainly something that we definitely have to do. We also have to help them prioritize what this risk is and how and what they should be doing with this particular risk. The beauty of some of the more traditional lines is that this math or at least this process is already in play, and everybody at the stakeholders understands what to do. Right now, we're still learning that and we're still pushing that, and we're not at a point right now that I think we need to be. But the good thing is that we are definitely on the pathway of learning more, of doing more, and developing more actionable steps when it comes to them.
And of course, Nadia, ransomware continues to dominate claims, especially among SMEs. So how are you adapting, or rather helping your clients to adapt to these evolving tactics of double extortion and data exfiltration?
I think one of the more important things for us to do is to really sort of make sure that they understand what could happen and how they would be when it does. So one of the things we definitely do is we curate trainings, we curate education, and we curate policy languages really to really focus on those clients or policyholders that are record less versus record forward. So being able to curate that helps them to better understand or answer the question, could this happen to me? And being able to make sure that they appreciate that is certainly something that we do. One of the things that we do, I'm a child of the 80s. I love a great top 10. And we make sure that they not only understand what the controls are from a top 10 perspective, we also make sure that they're able to embrace them and then understand how what they're supposed to do with that particular knowledge. It is said that when it comes to controls, one of the key things that folks still don't appreciate is they will back something up and they say, oh, it's in backup, and that'll help inform how they do different things. But if you don't test what some of these solutions are, you don't know if they're actually working, and you don't know if they will provide you with the returns that you need when all the bad things go wrong. So making sure that education is curated in that way is certainly something that I think continues to be needed.
It sounds like, John, there's a need to almost walk your clients through the process.
Yeah, absolutely. So when we have our onboarding process, I like to walk our clients through today's attacks, right? Not the attacks that happened 5 years ago. And what I mean by that is ransomware has evolved. It may not involve encrypting your data. It may just involve exfiltrating your data, met by a threat that I'm going to expose it to the world if you don't pay me, right? And so the questions I have are, what data are you holding, right? How sensitive is that data? Does it involve intellectual property of some very large clients of yours? You have clients that say, well, I'd never pay a hacker. Well, I put the scenario forth that says, well, this hacker's going to expose your biggest client's most sensitive intellectual property, which could ruin their business. And by the way, do you have, a non-disclosure agreement with that client? And you're making a willful decision knowing that it's going to be exposed. What does that mean from a contractual liability perspective? What does that mean from a reputational perspective? Are you going to lose those clients? Will you be sued by those clients? And does your board have anything to say about that? So these are really nuanced questions that you have to walk through in light of today's ransomware attacks. They're different than they were years ago, and so you really have to be ready for that.
Another difference, perhaps, Neil, is the frequency of payments towards ransoms. That's appearing to decrease, isn't it?
Yeah, so based on market research and reports are coming out, we're seeing that ransom payments are actually down. We're not seeing the frequency up. The severity is still there, right? We're seeing ransoms being higher. But one of the reasons why I think corporations in general and businesses are just deciding not to pay ransoms more often is because there's less certainty about what happens when you do pay the ransom. Back in 2016, I want to say Honor Amongst Thieves, you could pay and generally that was the end of it. They would, send you a video of it being deleted. What we're finding happening now is they will actually delete it, or they'll say they'll delete it, but then they'll use it for mining of other data. So they'll look for social engineering attacks or other attacks they can do against other organizations using the data they stole from you. So it's less about them actually deleting it, more about them using it in other ways that maybe aren't as visible on the dark web. So what ends up happening is whether you pay or you don't pay, you still end up in the exact same situation. At the end of the day, it's a business decision. Our customers make the decision whether or not they want to pay at the end of the day. They're just claiming back against their policy. But, there are discussions and stuff on the internet in various articles about the fact that corporations are having a difficult decision around whether to pay or not pay. And then, of course, the issue always is at the end of the day is when you do pay and stuff, it's about being prepared for what's going to happen next. There's notification and so on and so forth. So I guess with ransomware, we are seeing it still evolve. It is quite costly for clients. And at the end of the day, we're just there to support them regardless of which way they choose.
And Paul, if
Awesome.
I may also add that some of our customers, Neil just brought something, and I just sort of thought about it as well. They also have to think of the impact of paying and not paying, right? I do think that sort of cost analysis has to be done. And you're right in terms of, and to add to what you're just saying, we're starting to see violence be a way of how some of these threat actor gangs, sort of the newer breed, we're beginning to see where they are threatening levels of violence. So that changes the conversation. When you were an owner of a business and they then say, we have your daughter or we have your wife and we will commit X if you don't do it, your business can say, yes, we won't pay the ransom, but that changes the dynamic and it changes the conversation. So I also think that when people are becoming prepared, they have to be prepared for both scenarios and what the end game could be for both scenarios, because it can be not just financially costly, it can also cost in other ways.
Think that's a good point about why insurance is there to support, right? At the end of the day, our policy just says if you have a ransom event, we're going to pay it, right? Obviously, they have a discussion with us about it, but it's the business's decision whether it is. And sometimes it's because data was exfiltrated, and other times it's the repercussions against the business that they don't is why they pay. So at the end of the day, we don't really care. It's our policy. You get to choose when you want to enact it and so on. But I think that's one of the backstops of why people need insurance, because you don't want to try to come up with $1 million on your own because you have a cyber attack. You buy cyber insurance, you don't have to worry about it.
Yeah, makes sense. And of course, one of the things that we're constantly hearing about cyber policies, just to circle back to you, John, is that they're no longer just there to pay the ransoms. They're there as, sort of risk mitigation tools as well. But with that resilience gap widening between insured and uninsured firms, what role do you think that brokers and indeed insurers should play in educating clients about the full scope of those cyber policy benefits and indeed the importance of business continuity planning?
Yeah, so I have regular discussions with uninsured organizations that decide not to purchase cyber insurance. And what I do is I take a pretty simple approach. I'll ask them two very basic questions. And I'll say, let's just say you have a ransom note now across all your screens or your system is completely down. Two questions. Who are you going to call and how much is it going to cost? And a lot of times that question will be met with either a blank stare or I'll get an answer that's way off base. And so what I like to do is remind that uninsured organization that, with a cyber policy, there are some terrific features, one of which is the crisis management team that can be called on a 24/7 basis. Any day, any time of night, you can get access to the best data breach response experts in the world. And you're going to have negotiators, you're going to have breach coaches, you're going to have IT forensics investigators at your fingertips just because you purchased a policy. No matter the limit, if it's $1 million or $100 million, you've got those experts. And then, of course, what's it going to cost? I mean, it's incumbent upon any organization to plan for this. You cannot claim ignorance. You can't claim it's not going to happen to me. It's in the news every day. So again, if it hits, what's it going to cost? And what are you doing to transfer that risk? One of the things our industry has gotten a whole lot better at is helping our insureds quantify what an attack might look like. What are the probability of it happening based on your controls? And if it does happen, what's the range of costs? So you're really just going through the application process and the limit decision-making process you just become a whole lot more educated, and you're ready to transfer the risk through a thoughtful way. So there's just so many benefits to purchasing a policy. No matter the size of the organization, no matter the sector, you're all exposed. 100% of our clients are exposed to cyber risk, and they all have to, walk through that process of, what happens if I don't buy cyber? Who am I going to call? What's it going to cost?
Are your tactics, Nadia, similar to John's?
Absolutely. I mean, I think one of the things that we definitely remind people about is that a cyber insurance policy is an insurance policy. There, we have solved the mystery of and the mystique around what cyber insurance is. It is an insurance policy at the end of the day. And the reason why we drive that home is that there's this mystique around the fact that it involves cyber. So I won't really understand it. And some folks, if they don't understand it, they will either just ignore it. And those days have long passed. There's no way that you can ignore what your cyber exposure is. I think we've all done and become better at ascribing what those exposures could conceivably look like. I think one of the things that still needs a little bit more work is how we prioritize those particular exposures and how we are able to help clients better understand how to prioritize it so that they understand it's mission critical. They understand, to John's point, that everybody has a cyber exposure, and that understanding that as your baseline and then being able to build upon it. So education for sure. Being able to have them understand that their tools don't just exist and you can't just sit them on a shelf. They have to be tested. In some instances, they have to be upgraded. You're in a constant place where you are always going to be uncomfortable. And candidly, that's what we are from a cyber perspective. But we can lean into that. We can lean into that by creating our own baseline for it. So being able to understand what are the critical controls are, understanding how you test for those, the adequacy around those controls, understanding what your true exposure is, and then understanding that cyber exposures evolve over time. So your exposure 1 year ago is your exposure 1 year ago. It doesn't mean that that is your exposure today. So being able to have those informed conversations, definitely the data has evolved. So we're at a point in time where we can evolve the conversations. Analytics is a must. You don't look left and right to determine what your cyber limit should be, nor should you say, oh, I bought cyber, tick box, I'm done. I'm covered. That's not how it works. It's an evolving conversation, and it has to be treated that way.
Yeah, makes sense. And then some great approaches from both John and Nadia, Neil. But it's becoming a more difficult sell, isn't it? Just because of the state of the economy right now.
Yeah, like, the economy is obviously getting more difficult, right? And people want to cut where they can. And they look at cyber and ask themselves, why do I have that? But it's not what it was, several years ago, to kind of Nadia's point. And then John's point of, you need it in order to survive as a business. Like, imagine being a board and saying, we didn't insure our invoices or our accounting system or anything else, right? It would be like dropping property insurance 20 years ago and saying, we're not going to insure our accounting department because we just don't think it's going to catch fire, right? It's not a way to go about business, right? Nowadays, people have shifted to SaaS and online cloud systems and so on. And so your insurance has to shift, right? Cyber criminals they're online, right? You're less likely to get broken in through the front door than you are online, right? So let's shift insurance to focus on what we are now. We're a digital economy. We're a digital, we're digitally connected and stuff. We rely on other services and so on. So what that means is really just talking to clients about understanding what it is that their dependencies are in terms of other vendors and just-in-time ordering systems and supply networks that are all digital, and making them digitally sound. And then also realizing that cyber insurance isn't like traditional insurance, right? When you buy a cyber insurance policy, you're you're getting a bunch of prevention tools, you're getting insurance, but then you're also getting that kind of continued monitoring and planning, right? So if you compared it to fire insurance, it'd be like buying fire insurance and having a car drive around your building constantly looking for a fire, right? We're sitting there in the background, we're scanning clients, we're looking for vulnerabilities, we're looking for broken windows, old locks, outdated systems, and we're notifying them about it and saying, hey, why don't you jump on this? It's going to stop you from needing a claim, which is your policy. Yes, you bought our policy with you, but what we want you to do is we don't want you to ever have to use it. That way we can keep your premiums down nice and low. And instead, we're going to have all of our proactive tools there at the beginning. I think our marketing department did a bit of an assessment around our VCSOs and our scanning and stuff, as well as others obviously in the market that they get with a cyber policy. And if most businesses went out and bought all that threat intelligence off the shelf somewhere, it would cost them far more than the value of a policy. And the reason for that is because we buy it, we build it, it's our in-house product. So we can effectively give it away for free at a very low cost, but it also is to our benefit by dropping, obviously, the likelihood of you having loss. So I think to kind of wrap it up, I think it's clients understanding that it's not just cyber insurance. They're buying a package of tools that create that resiliency and allow them to make it through. So if I would encourage anyone, drop your property insurance and please pick up cyber. Just kidding.
Well, let's wrap up the year with just a little tiny question about the potential of a cyber pandemic of sorts and the need, therefore, for a federal backstop. I mean, how are you preparing for the possibility that cyber risk, Neil, could become uninsurable without government intervention?
Yeah, so we started studying this a long time ago. Box was started in 2018, and I think I joined in 2020. And one of my first big projects was to figure out, what is the systemic risk we all are facing, or what's a cyber pandemic look like, right? If we talk about it, really, when you look at cyber insurance, it's not isolated geographically, right? You can't have a fire in two different continents at the same time due to the same cause, right? Whereas cyber, you can have a global pandemic. It can take down the world. We saw it with CrowdStrike, right? The good part about CrowdStrike is it hit Australia, New Zealand first. So by the time the rest of us are aware of it, business was just getting started in North America. We'd all come up with workarounds. So we've already started modeling it. We've already started figuring out how we're going to handle it. Some insurers took the approach that they were going to exclude it. They were going to create widespread event exclusions and so on and so forth. We took the reverse. We've actually said to our clients, listen, we'll cover you for an outage like this. If a massive cyber pandemic happens, we are going to provide you with coverage because we understand that a lot of the larger businesses have already started to mitigate this risk by having server farms in multiple regions and so on and so forth in order to mitigate it. So I guess kind of like how the federal government has looked at flood and said, you know what, this is a massive event. If we asked insurers to take it on, it would certainly spike premiums in a lot of areas. They're looking at cyber and saying, you know what, maybe we should take this on because this is one of these risks that if they price it, it might make cyber insurance unaffordable and therefore less people might buy it. We want more people to buy it because of the potential risk to our economy in terms of billions of dollars leaving due to criminal organizations. So what we're going to do is we're going to look at taking it on. But to think that insurers haven't already looked at a cyber pandemic and started pricing that in and understanding what that risk exposure is, well, I just don't think that's the case. I think it's great that federal support is going to happen or maybe will happen, and that'll help to control a lot of the premium dollars because we maybe won't have to price it into our risk, but we are already considering it and factoring it when we do our pricing because if it does happen, we obviously don't want to go insolvent like anybody else.
All right, so it sounds like Box is getting ahead of the game. But John, do you think overall that underwriters have done a good job preparing?
Yeah, I think, it's going to stay insurable simply for the fact that insurers have taken concrete steps to sort of think about the systemic attacks and how they may or may not pay. So we've had a lot of wordings changes over the years around exclusions for attacks on critical infrastructure. We've seen waiting periods, change and maybe increase. We've seen exclusions around cyber war, and that's sort of been broadening. And sometimes you can contract that. As a broker, you should be negotiating the wordings to get as much coverage as you can. But we're seeing sort of that play out right now. I think it stays insurable simply because of the steps and the wording changes that carriers have added, anticipating systemic events. So they won't necessarily have to pay limit losses on their entire book. So I think it stays insurable. As far as the backstop goes, I mean, it's been talked about for many, many years now. Unfortunately, we've seen changes in administration. So as soon as you get close, there's a new administration, and then it goes to the bottom of the priority list. So that's still actively being discussed. I'm hopeful that we get to some place, but I think right now it's not necessarily a priority, and we'll see where it goes. So that's sort of an open question right now.
And what about you, Nadia? Do you think that enough work has been done to understand what the potential loss can be?
I don't think we know enough about what the potential loss could look like. I think that there have been instances where it is sort of informed the overall process. I mean, if we think about the CrowdStrike event, that was a system failure event. That did not involve sort of a security failure. And it also identified that some of the models that were used to help develop rating matrices for cyber insurance didn't even contemplate cyber insurance system failure as a loss event. So I do think that there's a bit more work that needs to be done there. I agree with John and Neil. I mean, I am not of the opinion that we're at a point right now where the lack of a federal backstop makes it uninsurable. I still think that we're in the space where we are still understanding what the potential of loss could be. I mean, there was a car manufacturer in the UK, I'll leave it at that, and they had an event, and because of that event, it had ripple effects to all of the suppliers that supplied different elements of the actual car, whether it's the tires, the engines, and everything. We don't have a good understanding of what the potential that loss event could be. So I do think it's big, but we haven't been able to prove it in a way that I think we still need to do. There's more work to be done to better understand what the potential for loss would be. So to then double it with the need for a federal backstop, I don't think we're at a point right now that we can even conceivably think of what it could be from a modeling perspective.
Well, great thoughts from everyone. And indeed, huge thanks to all of our panelists for their participation, not just today, but throughout the year. And in 2026, well, we will be presenting something a little bit different on the cyber insurance front. So watch this space and keep it right here at Insurance Business TV.